Good morning, everybody. How we doing? It is Cowboy. It is Tuesday, and it is 8:30 a.m. EST. We're live. We're live on X. We're live on YouTube. We're live on Rumble, and I did go ahead and test the Rumble streamer this morning. So those of you might have seen, we kind of flickered live really quick, and then we're no longer live after that. But either way, we're live now. So, StreamYard is still doing its thing. It'll still allow us to share. It's just Rumble seems to have a hard time right now with the screen share function, and we gotta share the screens. Speaking of which, go ahead and do that right now. Let me go ahead and share the screen. Now, if you want to know more about what we do, please zap that QR code in the top right-hand corner. We're going to talk more about all that stuff later, right? Towards the end of the show, we'll talk about who we are, what we do, and all that. But for now, I want to jump straight into the content here. Nice couple of days for trading. There's been we've seen some wins. I did post not as I entered, but a little after my entry on X. I posted what I had going on with a euro long, and I exited last night at some nice profit. It made its way up to 1-to-1. And then there were some things on the chart that I didn't like as far as just sitting in the trade. I wanted to preserve the profit. So I did get out and I got back in. As you can see, no, you can't see on the screen. I gotta re-share this screen. Give me a second. Entire screen. Okay. And let me open this up so everybody can see. So now the trade has already gone pretty decently in a profit, so it's not the same kind of opportunity as it was when I shared it with Algo Factory. I have a small trade here, and I have these algorithmic stop loss kind of moves where basically you can my algorithm is going to tell me when to raise my stops. And what's up, March? And what that means basically is that as this goes into profit, I can raise the automatic exit, right? Let's just say the price went against me. Okay, this is for like brand new traders. The way that this trade works is I entered right here where this blue met this green. And as price heads up, at the top of this green box is where I will automatically exit the trade at a profit. If price goes against me and it goes in the direction that is not making me money, in other words, losing me money, I have what's called a stop loss right at this blue line. And that means that if price goes beyond this, I'm automatically going to exit the trade and cut my losses, right? Because especially in a market like Forex, anything with derivatives, especially, you can lose all your money, not just lose money, but you can lose all your money in those kind of markets, right? So I have what's called a stop loss. It's like, hey, I've limited my losses at, we'll just say $1,000, just to make a round number. This is not the real amount that I put in my trade. I just want to make a round number, right? So now here's the thing about it. This is a 2.58 risk to reward ratio. If you can see it, it might be hard to see on the screen because the writing is kind of small, but right where the mouse is circling right there, it says risk to reward 2.58. And what that means is that if I risk $1,000 and price goes all the way to my target, then I'm making $2,580. That's what that means. So this is an asymmetrical play, which all my plays tend to be. The worst kind of play I'll take is a 1-to-1. The worst kind of plan I will have is where I risk 1,000 to make 1,000, right? So what that means is that with a risk to reward ratio of better than 1-to-1, I can lose like it depends on the scenario. It depends on what the ratio is, but I can lose like 2 out of 3 trades and still be profitable. Like, that's a basic estimate, but that's just not, I actually win more than 2 out of 3 of my trades. So not only do I win more than I lose when I win, but I win more often than I lose. And that is a recipe for success, right? So at any rate, this is a good little trade. But again, I have it's not automated in this particular case. Although I do have automated algos, but this is a manual algorithm, right? Just like anybody who trades uses, just a manual algo. And as the price basically does what I just described, I will be raising my stop just below that area, right? and I have alerts that will tell me when that's going down. So that's that. It's just a neat little trade to kind of, like I said, I got out last night. I made money headed up here nicely, and I thought I just saw some things in the algos that I didn't like, and so I hopped out before I went to sleep. I wanted to preserve that profit, and so I went ahead and hopped back in, and I'm already making back some of that money. It's a smaller trade than I took yesterday. Yesterday I took a pretty good sized trade, um, so that's just, what I do. I have these scenarios where I identify an asymmetrical scenario. I have where I can risk a small amount to make a large amount, right? And then I know based on my testing that I can win maybe 75% of those. It just depends on which algorithm I'm using. This one is it's better than that, but you're usually going to be in the 60th percentile. Most people that I've kind of been reviewing their algos, they're winning maybe 6, 7 out of 10, right? So 65%, and that's great, especially if you have an asymmetrical risk to reward. And this could be done in cryptocurrency. This happens to be in regular currency. This is the Forex foreign exchange market. So this is the euro versus the dollar, right? So that's how that works. And you don't need a huge account to make money because there's leverage involved. Anytime you trade forex, there's always going to be leverage, which is basically where it's automatic that your position is augmented, right? So your position is made bigger automatically. You borrow money for a very short period of time. And with forex, most of your forex brokers do this automatically. It's not like you need to push any buttons for that. I know that this like Oanda is the broker I use, OANDA. It's not, I don't recommend any brokers, but if in the US, that just happens to be who I like to use. They're US regulated. There are brokers all around the world. There are those that are regulated, those that are not, and you got to do your own research on that. I like Oanda. And you can use Oanda in other countries, but anyway, the Oanda has a nice function where, and TradingView does this for you, I think, on other brokers, but there's a nice function, whether it be TradingView or Oanda, where they will actually tell you, like, okay, this is the dollar amount I'm risking, right? Because Forex, it used to chase a lot of people off because you had to measure in what are called pips. And you had to do math to figure out how much you're actually risking. And that's just, that chases a lot of people off. In this case, they've automated that to where you actually know what dollar amount you're doing. So that's the euro, and let's take a look at the broader market. I'm going to take a look at the private group. Oh, that's right. We don't have any. So right now I'm broadcasting out to X, and I'm broadcasting out to, let's see here. I'm broadcasting out to YouTube, right? So if you have any questions, go ahead and ask in the YouTubes. That would be where you want to do that. I've got a request. Let me see here. I got a little bit of a request over in the private group. I'm going to fulfill that really quick. Give me 1 second. Okay. Now, for those of you who are in the private group, by the way, the gorilla will be here. He had something he had to handle today, so he's waiting. He said he'll be on by 9 o'clock. He was waiting on a ride home. Actually, he was out servicing his car, and there was supposed to be like one of those dealer shuttles to take him home. So he'll come on any minute. Now, tomorrow is Thursday. What the heck just happened? Hold on a minute. Oh, okay, never mind. So, long story short, tomorrow is Thursday. Thursday is a special day at Algo Factory. The gorilla, the gorilla, who co-hosts these shows with me, sometimes he'll come on at 9 because he has a lot of clients that are around the world. He deals in precious metals and crypto around the world. So sometimes, right when these guys are all, getting off work and wherever in Europe or, whatever they're doing in Asia around this time, he'll be on the phone with them. And sometimes those phone calls run into like when we're doing this show. So he might not show up until kind of like today, 9 o'clock. And on Thursdays, most Thursdays, I'd say at least 3 out of 4. And like some months, it's going to be 4 Thursdays. Some months it'll be 5, like he'll do an extra, on a non-Thursday, and some months it's 3, but he'll bring in data that comes from on high because he talks to people who are pretty high up. And so he'll bring in some economic data and he'll share it there. He won't share it with anybody else. So he'll be able to tell us what the people in the know are talking about, and therefore we become the people in the know. And tomorrow is going to be one of those days, according to what he said during the show yesterday. So zap the QR code. Come join us if you want to know what's going on in that conversation. QR code's top right hand side of the screen. I'm going to look at Bitcoin. We had that Solana news yesterday. I did a show on it. You can go to the YouTube channel or Rumble, and there is a show regarding what happened to Solana. I think the Solana network going down yesterday was a really good stress test because the price of Solana basically didn't move. I mean, yeah, it moved. It dropped like a couple percent or something like that, and then it like popped right back up, and it's pretty much stayed where it is. So Solana really price-wise withstood that problem that they had with their system. So that's pretty awesome. I mean, I think if you had a lot of different cryptocurrencies that their entire network went down, they probably would sell off. But we have to remember that Solana, I think they went down for a few days in 2023 when the drama happened back then around FTX. So the fact that they went down for a few days at that time, popped back up, and now they're one of the most popular cryptocurrencies there is. Prospects are bright. I think Solana is pretty hot, and I think it's going to stay hot. Crypto is right now, as you can see from the chart, it is consolidating. Crypto in general, and this is Bitcoin. So Bitcoin has kind of developed this range, and the market is really quiet right now. So the way markets work, just so you know, and this is markets of all kinds. For the most part, you get periods of a trend, and then you get periods of consolidation. And one of the ways we like to trade is with the breakouts of these consolidations, right? Catching these large moves and these kind of, more, we'll use the word violent moves, right? So those are the moves that make us money. Well, in between those moves are consolidations, and those are tradable as well. The price goes back and forth in somewhat of a range. Now, sometimes that range is kind of on a lower time frame where you're looking, you're in and out, in and out, in and out, like maybe several times a day. Some of the ranges might be a little too tight to trade, but range trading is a great way to kind of flip back and forth and just, long, short, long, short. It's not, it's tricky when it comes to certain things, but the way the market works is as I just drew it, where you have, let me expand this screen real quick, where you have like a period of consolidation and then a move, and a period of consolidation and then a move, and a move, and then a period of consolidation and a move. So right now we're in a kind of a large period of consolidation right now. The last time we had a consolidation like this, I guess you could compare it to here, or perhaps kind of to here. This was a pretty wild time. This was the ETF time. I don't want to use this as an example because there's a lot of volatility even in this consolidation. It was not as predictable, not as clean. But, here, this was a consolidation that lasted from 12 January to 18 January. So this was like a week, right? The price bounced around before it jumped out, and it made its way pretty far down. It went from 43,000 all the way down to 38,000. That's big. That's 15%. And then it made its way back up. And there was a couple of these opportunities in between as well, where there, two trades on the way in this larger trade. Well, you have price that has effectively been consolidating. You could take this all the way back really from, say, 29 January till today, which is, it's like a week and a half. And so the loose rule, there's not any hard, fast rules in trading, but the probability is that if you have a consolidation, the longer that consolidation is, the more powerful the move is going to be when it happens. So now it's actually really difficult to determine which direction that consolidation is going to break out. That's one thing that, is kind of the trick for traders, right? And I have a new trick for this I'm going to share in the private group today, right? Because I was just talking about this like yesterday and the day before, and I remembered what I used to do to determine which way price might be attracted to. So there's a particular trading tool I used to use a lot. I don't use right now. I'm not going to talk about it in here, but we're going to review that. So private group, be ready, right? And if you could tell, if you have at least a probabilistic way to determine which way price will go, then you're in really good shape, right? And you don't really need that. What you can do with these is you have an area of interest where you have, basically used some knowledge of where price goes, and it triggers you into a trade. Now, how you trade that can vary based on a few things, but basically you can use prior market structure to determine, okay, I think price will head down to here or price will head up to here when it breaks out, right? So the breakout is going to determine the direction. If it breaks out to the downside, you can probably go short. There are fake outs, and that means that you lose those trades, and that's fine because you don't win all trades. You're going to lose some trades. That's just how it is. But if price breaks out to the downside, there's a decent probability that shorting down to the bottom of this range, that's a very high time frame range, is not a bad play. And then there's also a probability where if price breaks to the upside, you can get a nice little long, depending on the metrics, to the top of this structure right there. Right now, like I said, I have another tool that we will use that may help us out with that, right? I have another tool we can introduce that might give us a little bit more of a clue as to which side that's going to be. And that way, like if it breaks out to the upside, it's like, oh, well, then there's a decent chance it's not a fake out, that kind of thing, right? So we'll get into that later. But for now, that's it. I mean, it's just ranging, and it's ranging in a big way, right? It's in this from since the beginning of December. Now we're in February, so almost 2.5 month range, and then it's inside a smaller range inside the range. So chances are it's going to pop up and touch the top of the range, which is a little bit of a smaller trade, or it's going to pop out to the bottom. I can take a look at a different panel and see if I can glean a little bit more. Don't let this chart freak you out. It's a lot of testing going on. It's not a full algo. So let's see here. I'm going to clean this chart up for everybody right now. Yeah, I would guess the pop up to be to the upside at this point, just based on everything I'm seeing. So that I would guess to the upside, but I'm not using that tool right now. That tool I just mentioned earlier, the mystery tool. So we'll see if we can add that in here in about 10 minutes, 12 minutes when we end the private lab. So I'm not getting a whole ton of questions, so I'm just going to move on to start looking at other assets. We've been talking about Solana, so let's take a look at Solana. Solana in a consolidation. Now, from a price action standpoint, this is a short-term bearish scenario, right? You have price continuing to bounce. The bulls kick in, but they kick in at that same level every time, pretty much, right? So it's basically the same level. This went a little bit lower, probably because of the drama with the network shutting down. But essentially, what you're getting is a reversal version of a bearish ascending triangle, right? So let's go ahead and put my triangle around it, and I'll explain what this means and how we can trade this. This is basic price action trading. So this is kind of my roots, and a lot of traders' roots. They start out with price action trading, and pattern trading is something that works. Just like anything else, it's going to work a certain percentage of the time. So if you're going to pattern trade, then you have to back test and you have to look for those patterns. And there are automatic indicators, I think, for free on TradingView that will point out these patterns to you, so you don't have to sit there and eyeball it. But it doesn't hurt. It's a good thing to go back and eyeball and look for those patterns, right? Because it teaches you to look for the patterns. Now, in this case, I would run this a little bit deeper. Probably like this. Now, the story that's being told by price action is that the bulls keep kicking in as price comes to the bottom of this triangle, right? the bulls keep pushing back up. But the problem is they're running out of juice because they can only push price up so far before the bears kick in. And the bears, who want the price to go down, are pushing earlier and earlier and earlier, right? So it's like somebody who's throwing like a heavy ball up into the air, and then that ball keeps getting heavier, and their strength is running out, and pretty soon they're just not going to be able to throw the ball. They're going to have to let it drop. And so if it does drop, it's going to drop downwards. And how do we know where that's going to go? Well, we got a couple of things we can do. We can look at market structure. We can look at some other tools that we use. But for now, I'm going to use what's called a fib extension. I'm going to go from the top to the bottom of this triangle, and our most likely areas for price to go are going to be these Fibonacci extensions. We do some pretty extensive classes on this in the Algo Factory classes on the website, and I use these all the time in our live shows. So there's no shortage of explanation on how this works. But you got your 272 right here and your 618 right here. And just to explain it, the Fibonacci numbers occur in nature. So it's like it's a weird phenomenon where you see it all the time in nature. It's like the universe's language or something. The ratios in your fingers are Fibonacci ratios. You like your one joint to the next joint is going to be a 0.618, right? Your 618, as you can see here, is an important number. It's the golden ratio, they call it. Pine cones had, like, the way that the pine cone swirls is a Fibonacci. Snail shells, the way they swirl is a Fibonacci. You see it everywhere in nature. It's just all over the place, and it somehow magically happens to work in trading. Now, there's theories about why it works, and that's fine, but I'd rather just understand that it works, right? Now, market structure is going to come into play here, and market structure is going to, let me get my arrow out here. You have basically price heading up and then creating this prior uptrend where price comes, it goes up, pulls back, goes up, pulls back, goes up, pulls back. And those pullbacks create structure. And the bottom of these pullbacks is where price may stop. Fortunately, the bottom of these pullbacks is below our fib numbers. So I probably would stick with the fibs as my targets. As a matter of fact, I might front run the fibs just a hair because everybody else is probably putting their targets at the fib, right? So I like to front run. I like to get out before everybody else, right? So that's just how I roll. So whenever this actually breaks out, what one can do, and the way I would handle this is, you can see that these like 3-hour candles can't seem to stay below this line. They keep popping up. They break below and then they close back above. So I'd say once a 3-hour candle closes below this line, that's a decent entry for somebody who's more risky. Now, I'll show a less risky way to do it, but let's just say price breaks below right here, right? It comes up here, breaks below, and a 3-hour candle closes. So one of these orange candles, the actual candle body, these rectangular part of it closes below. That's a decent entry, right? Now, one could enter right as that happens, and that would put us like there. And then whatever your stop loss measurement is, you have to determine that how you want to determine that. It might be structural, it might be ATR based, whatever. But then you have like a nice, maybe depending on how you do it, maybe like a 2-to-1, So you're risking, $100 to make 2 if it goes all the way. Maybe take some profit here off at the 272. And that's, I think, a decent play. That's a decent play. It's a freebie. Everybody just got a freebie. So if you're trading, this is like a freebie of what could happen. Now, there's other tools that I use to make me say, like, go into this or not go into this, right? Like, there's other metrics I'm not talking about. So I may not enter this trade even if this breakout happens. But the less risky way to do this, you have to be a little more patient. If the breakout happens and the close, a lot of times you'll see price pull back up and then touch this line again and then head down. And that is a little less risky because you're seeing price pull back, you get a little bit better of an entry, and price kind of moves forward and all that. But the only problem is that price might not pull back at all. right? Price might just continue down and you're waiting for that pullback that never comes. So that's, again, less risky, but it's also like a little more risky because you might not get the trade at all. So, but that's just the trade plan. So like I said, that's a freebie. So now that we have come to the end of the show, I'm going to go ahead and let you know what we do. AlgoFactory.tech. We help people to learn how to trade. We help people of all trading, experience. So you might be new. We can show you the basics. There's a little bit of self-learning. Like our classes do teach a lot of the basics, but trading is such a broad subject that yes, we can point you in the direction. If you like have a question and it's not in the class, we can say, hey, here's where you can find that. So trading is not something that will be given to you. I don't care. You could have the best classes in the world and you'll never learn everything you need to learn from classes. It's definitely a learn by doing. So we can always point you in the right direction. If it's not, I guarantee you could take like the best class in the world and you'll be like, hey, this class doesn't teach me this. Like, that's just how it is with trading. Broad subject. But we also have a Telegram room where we're in there all the time. We're in there every single day. And you can always ask questions in there and we can always answer them or at least direct you to the answer. And then there's a community in there. Right now it's about 100 people, which many of them are active in there all the time. And they'll answer your questions. We'll answer your questions. The gorilla goes in there. He puts a lot of good data in there as well. And we do these shows like every day. But after this show, we're actually on for another full hour, right? So we go through the market open. So that's one thing that we do. And then we get on 5 days a week, Monday through Friday, 8:30 a.m. EST. We do this free show. You guys and gals can just come and watch that. You can ask questions in the YouTube, and that'll port over to whatever. I'll get those questions. I'll be able to answer them. You can say, hey, what do you think is going to happen to, whatever, Ethereum or something? And I can chart that. And then you can come into the private lab. And of course, on most Thursdays, not all Thursdays, but most Thursdays, we, we'll talk about some kind of high level stuff in the economy and markets, such and such stuff. So I'm going to go ahead and end the live show here. Thank you all for showing up. We really hope you enjoyed the show. Come over to algofactory.tech, trade your job, upgrade your life, and much love to you all. Peace.